In this video, we'll talk about Bitcoin and the bullish momentum we have seen during the last couple of days, maybe even the last week, if you would like to say it like that. We'll also talk about, or we'll talk about the technicals and the fundamentals and basically everything you need to know what's going on right now. For example, why are we dropping? And can we actually continue going up? Can we get a new high? Can we get higher than 17,400, which is the top we reached right here? So let's get right into it. First of all, I want to say welcome back to the channel. Hope you all are having a great start of the week. Now let's get right into into Bitcoin. As I said, we'll talk a little bit about the fundamentals. We'll talk a little bit about the technicals. First, I wanted to start with the fundamentals. I mean, Bitcoin has been more bullish. Volume is still relatively low. I think. I mean, if you compare it with the last 3 months, it's, as you can see, pretty low. Like the cycles which we always have during the week and the weekend have died down a little bit, which might be bearish on the short term, but long term I'm actually still very bullish on that, because that means that, you know, maybe these are some good times to accumulate some more Bitcoin. But apart from that, the biggest reason why we are getting more bullish momentum and more bullish fundamentals is because the inflation rate is dropping, and probably the monetary policy for most of the central banks is getting a little bit more dovish, which means that the interest rates will go up a little bit less. And that will slowly but surely shift into the interest rates dropping again, even though that might take a while longer. So what that means for Bitcoin is that today, or yesterday already, no, it was actually, yeah, it was yesterday evening. Yesterday evening we managed to break above, and you can see that was also expected, at least in my book. We would break above our main resistance level, which was 17,100. So that happened earlier. Now what we did today is we reached our first price target right here between, well, let's say around 17,400, which is not our main price target. My main price target would be 17,600, which is an even stronger resistance level than what we touched right here. But you can also see that 17,400 is pretty strong. You got the 200 EMA there, you got the 382 FIB, which arguably is the strongest FIB out there. So we are going to find resistance here, and we are going to drop down a little bit more. What we'll probably drop down to is this level again, around 17,100 and 17,000. And from there, I do think we can get back up to 17,600. Now there it gets interesting, because the main thing we would want to do is break above that. Because if you break above 17,600, you can really get some more recovery. But doing that, in my honest opinion, seems a little bit too difficult for now. We're getting new interest rates next week, as you can see on myfxbook.com. And oh wait, do we also have inflation rate then? Oh wow, we have inflation rate and the interest rate. That's those are going to be some nice days. But yeah, so that's happening. See if those are actually bullish for risk on assets market, risk on asset markets, then we might see something like this. But for now, I don't think. I mean, we might shoot up to like 18,000, but I don't think we'll really solidify our position above that. I think it's more likely that we'll maybe reach into that, but then afterwards that we will drop back down and consolidate on top of ultimately 16,800. I will be back with another update on Bitcoin tomorrow morning, but for now this really seems like the most likely scenario. We have some more bullish fundamentals, but in no shape or form, in my opinion at least, are they bullish enough to actually get that bullish breakout and get up to 18,500 or maybe even higher. So yeah, that's what I expect on the short term, and some insights around Bitcoin. But if you do have any questions, as always, let me know down in the comments. But for now, enjoy your Monday, take care, and bye.